God. Okay, guys, good afternoon. I hope we are all doing well. So today, we are here to take you through the basic knowledge you need to have on the forex markets. So if you have heard of forex trading before, and then you are interested in trading forex, then this video is for you. Join us live. Any question you want, kindly ask us, and I'm here to address or answer any question at all. So forex, as we all know about forex trading already, so this is an exchange of currency. So you exchange one currency for the other. That's all about forex trading. So you buy a currency, you wait for that currency to appreciate in price, then you sell. Okay, so that's forex trading. So if you have any question about forex trading, or you want to join our trading school, then let us know, and then we will add you to our trading school, and then you start trading with us. So if you have any question about forex trading, this video is purposely to address or answer any questions that you all have about forex trading, what you want to know about forex before probably you start trading forex. So put all your questions there at the comment section, and then I'll answer them accordingly. So whilst we are waiting for the questions, when you take the forex market, okay, anytime you open the charts, you will see some candlesticks going up and down, okay, and you need to understand the candlesticks, the types of candlesticks on the forex market, and then what it means when you see a particular candlestick. Okay, so first of all, you need to know, one, the type of candlesticks that is formed and where it's formed on the market. Very important. So when you take the market, for example, we have supply zones and then we have demand zone. So just like any market where when you go on the market, there are some prices that, you know, sometimes when there is abundance of a commodity on the market, what happens is that price of that particular commodity drops. So just like any other market, if that particular commodity is scarce, obviously the price will appreciate, or the price of that particular commodity will rise because it's scarce and there is a lot of demand of that particular commodity on the market, and so the price is going to increase. So basically that's how forex works. So on the Forex market, when you open the chart, we have demand zones and then we have supply zones. So the demand zones are zones, or they are market prices where usually there are a lot of buyers on the market trying to buy a particular commodity. Okay, so you need to be able to identify that particular zones on the market. Very important, because one, if you know that, oh, this particular market price is the demand zone or is a demand market price, what it means is that that particular price, usually forex traders come online to buy that particular commodity at that time or at that market price. So what you do is that you demarcate that particular price on the chart, and then you'll be waiting. Anytime the market moves to that area, obviously there's going to be a bias on the market, so a lot of traders will be online that time trying to buy that particular currency pair. Okay, so you also know that, okay, this particular market price, usually forex traders comes online to buy that particular commodity, and so because of that, the price of that particular commodity will rise. So you know that, look, if it's going to rise over here, and as we've established that on the forex market, we buy when we perceive the market to appreciate, you buy, and as the market moves to the upside, you make profit. Okay, so please, if you have any question, you can ask. Okay, if you have any question, you can ask, and then kindly share for others to join as well. We are all learning. If you have any suggestions, that's fine, it's welcome. Okay, so we buy just to make profit, and we sell also to make profit. So you should be able to demarcate your demand zones or your supply zones on the forex market. So you know that this particular price, whenever the market moves and then get to that area, the buyers comes online to buy. So obviously it means that the price of that particular currency pair is going to increase or is going to appreciate. So you'll be looking out for a buy positions. Okay, so your ability to determine a demand zone on the forex market is very important. So anytime you go into a buy position, then you know that the market is about to appreciate. The market is about to increase in price. So you have to buy. Now, we have supply zones as well. So just like on any market, you go, and then if there is an abundance of a particular commodity, and then there are not a lot of buyers, it means that the price of that particular commodity is going to depreciate. And so it will be on the market just plenty, so the price is going to just reduce. So the same way on the forex market, as the market moves, okay, up down, if it gets to a certain area, usually on the chart where market usually drops, for example, when the market is moving in an upside or in an uptrend, and it gets to a certain market price, then market begins to drop. Then that particular market price becomes our supply zone. So we have it in mind that in the future, whenever the market reaches that particular market price, the market will automatically drop. And so you'll be looking out for sell opportunities. So we sell at supply zones. So once you are able to determine the supply zone, Okay, and you know that anytime the market reaches that particular supply zone, the market depreciates, or the price of that particular commodity depreciates. And so what you will do as a trader is that you will look out for a sell opportunity. So we sell at supply zones and then we buy at demand zone. So the idea of selling at supply zone is that when you sell, as the market depreciates, or as that particular currency pair reduces in price, what happens is that you will be making profits as the market reduces in price. So you sell, and as markets reduce in price, you make profits. So we sell at supply zones and then we buy at demand zone. We buy when markets moves, or we buy at the market price where market usually move bullish. Okay, so there is these two terms that we need to understand about. On the forex market, we have a bullish market and we have a bearish market and we have a ranging market. So we have 4 types of forex markets. Okay, so we have a trending market, and then under the trending market we have a bullish trending market. So the bullish means that the market is moving upward. The market, because there are a lot of buyers on the market, and there is a little of that particular commodity on the market, the price is going to be increased. So what happens is that as the price increase, you make profit. So whilst the market is moving in an upward trend, we call it the market is in a bullish trend, or the market is a bullish market. Okay, and then we have a bearish market. Bearish market is a market that moves downwards, a market that moves below the previous resistance level or below the supply zones. Okay, so you sell at supply zones, we buy at demand zone. So your ability as a trader to determine supply zones, demand zones is very important. Now, okay, so we have some questions here from Mr. Desmond. Can you kindly elaborate more on candlesticks? Okay, thank you. So candlesticks forms the patterns or the chart patterns of the forex market. Okay, we have different types of chart patterns on the forex market, but then the candlesticks are the common one that we use. Okay, so the candlesticks, we have 2 main types of candlesticks. Okay, so we have a bullish candlestick. As we have a bullish market, the same way we have a bullish candlesticks. And then we have a bearish candlestick, which is the second main type of candlestick. We have a bearish candlestick and we have a bearish trend. So as the name goes, bullish candlesticks means that whenever they are formed, then that market moves in an upward direction. So usually it's either blue or green in color. And then the bearish candlesticks is usually red in color. Okay, that is when the market is moving downward. The type of candlestick that is being formed on the charts, so that you'll be able to know that this particular market is moving in a bearish trend or is moving in a downward trend. Those candlesticks are the bearish candlesticks. Okay, and they are usually red in color. Now, when you take the bullish candlesticks and then the bearish candlesticks, we have different types. And it's very, very important for you to be able to understand that particular candlesticks formed on the chart. Okay, now every candlesticks have an opening price and then a closing price, and then it has the whole body, and then the highest price that particular candlesticks went, and then the lowest price the candlesticks went. So in our next video, I'll teach you, we will take the practical the candlesticks one by one, and then I will take you through how those candlesticks looks like, and then how they affect our trading decisions. So every candlesticks one, it has a body, a wick, closing price, and then what? The opening price. Okay. Now, any candlestick with a big body means that that particular candlesticks, or meaning that that particular time, there are a lot of either buyers or sellers on the market, and so as the candlesticks move upward or downward, then you know that, for example, when there is a bearish candlesticks that is that has a very big body, then you know that there are a lot of sellers on the market. There are a lot of sellers on the market, so you'll be looking out for sell opportunities. Okay, Mr. Desmond, the next question. I recently read a certain book about candlesticks called the Candlesticks Bible, and I learned the color of the candlestick doesn't necessarily determine which type it is. No. Then probably I think that you did not really understood it. So the color of the candlesticks is very important. Yes, okay. The color of the candlesticks, you can make some settings on the chart. Okay, so you can decide to make some settings to change the colors. Usually the standard colors are red and then green. The red ones are the bearish candles. That is when the market is moving in a downtrend. And then the green ones are the bullish candles. That is when the market is moving in an upward direction. Okay. But then you as a trader, you can decide to change those colors. You can make some changes in the settings where maybe the bull candlestick or the green candlesticks, you can make it white, and then you can make the bearish candlestick black. That is your decisions. That's what probably will help you to be able to identify the trend very well. So the colors doesn't really matter, but usually or the default settings of the candlestick colors is green and red. The green ones are for the bullish market, and then the red ones are for the bearish market. Please, are you clear over there, Mr. Desmond? Please, if you have any question, kindly put it over there, and then I'll answer you. Okay, so let's continue. Now, as I said earlier on, the type of candlesticks that is being formed on the chart is very important. And every candlestick has some form of psychology behind it. And your ability as a trader to understand the psychology of that particular candlestick is very, 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 very important. So for example, when you are able to determine the supply zones on the market, and then the market is moving in an upward direction, market go to that particular supply zone, how are you going to know that this market is going to change direction to be a bearish market? You look at the type of candlestick formed. Okay, so the candlestick that is being formed at the supply zone or at the demand zone determines whether the market is going to reverse. Okay, so for the fact that you are able to determine or demarcate the supply zones or the demand zones on the market does not necessarily means that anytime markets get to that particular supply zones or the demand zone, market should reverse. No. So you look at the type of candlestick that is being formed at the zones or at the supply zone or the demand zone. Okay, that's why you must know all the type of candlesticks on the forex market and understand the psychology behind them. So whenever you see it, you know that, oh, whenever I see maybe an indecision candlestick form at the supply zone, then market can reverse back to to be a bearish market. Okay, or when you see an indecision candlestick form at a demand zone, then you know that market can possibly reverse back to an upward direction. Okay, all right, so we will, in our next video, I will take you through the type of candlesticks, their psychology, and how to trade them accordingly. Please, if you have any other question, you can put it and then I'll address. So one, we have we have three main types of market structure. Okay, every experienced trader, whenever they open the chart, they are able to determine the type of market chart they have, and that is very important. So we have the trending markets, and then the trending markets, ranging markets, and we have choppy markets. Okay, so a trending market means that meaning the market is either moving in an upward direction, or market is either being bullish, or market is being bearish. That is trending market. So it's either market is moving in a downward trend, or market is moving in an upward trend. Okay, and then we have the ranging market. So usually in the ranging market, it's like a zigzag market. Okay, where market goes up down. So market has a well-defined resistance zones and then well-defined supply zones. So whenever market to that resistance zones, then it drop. When it reaches the supply zone, then it goes up again. So those particular market structures are called the ranging markets. It's good you can trade a ranging market if you know what you are doing. Okay, but usually for beginner traders, I will advise you trade only trending market. You trade only trending market. So when the market is moving in an uptrend, then you know as a beginner trader that now market is moving in an uptrend. So I'll be looking out for buying opportunities alone. But when the market is moving in a downtrend, you'll be looking out for a sell opportunities alone. So that facilitates your decisions making, and you don't really suffer to go into position because you know that, or you know the direction of the market already, and you know that we don't trade against the trend. You always must trade with the trend. So first of all, you should be able to establish the trend of the market first, and all your decisions should be in line with the trend of the market. Okay, please, if you have any other questions, you can put it there. So we trade with a trend. all your decisions must be in line with the trend. Okay, all right. So please don't forget to subscribe to our YouTube channel. You can comment, you can share for others to also learn. These days we don't do one thing. Okay, so even for example, if you are a doctor, you can still trade forex, just that you will have to stick to a particular trading style. So for example, you are a doctor, maybe before you go to work, you analyze your market early in the morning, and you know the direction of the market, you predict the direction of the market, and you go into a position, and then you set up your take profits and you set up your stop losses. Okay, then you leave the market alone, go to work. By the time you close in the evening, you come back home and you've made either profits or you've made loss, depending on what decision you took on the market before leaving. Okay, so based on how you want to trade it, we have traders that do it as a full-time traders, and those people, they are always sitting behind their charts, analyzing, making decisions. And then we have day traders. Day trader, usually, if maybe you have any other profession that's probably you've been going to work and all that, you don't have that time to always sit behind the charts, then you have to probably be a day trader. So early in the morning, you go into position, then you leave the market and you go. By the time you close, you've made some good money. So this one, or forex, is going to be your second form of income, and you will like it. Bet me, you might end up quitting your job and focusing on forex alone. Okay, so making right decisions on the market is very, very important. Please, if you have any other questions, you can ask. Okay, yes. So I'm waiting for questions. Thank you very much. In our last meeting, you've made mention of traits of forex traders. Okay, traits forex traders must possess. Can you kindly mention them again? Okay, that's a good question. Before you can be a successful trader, first of all, you must be someone that have patience. You must have patience. In fact, patience is very important for a trader. Okay, why? Because when you look at the chart does not move straight. It moves up, down, up, down. Okay, so if you don't have that patience to wait for your position to hit the take profit, you might close your position. Meanwhile, it's just patience you need for you to make the money you want on the forex market. Okay, so patience is very, very important. The second trait every trader must possess is having a mentor, or having a strategy. Having a strategy. Okay, when you have a strategy that is being back tested, in fact, you are almost 80% up your gains. When you have a back tested strategy, in fact, that's it. You know that whenever you say this, you go into position. If you are not saying it, you are not going into any position. Then you need to be disciplined. Okay, don't combined a lot of strategies at the same time. No, we don't do that on the forex market. Okay, have only one strategy, stick to that particular strategy. Okay, yes, so you stick to one strategy, backtest it, and then if it works for you, that's it, and you stick discipline to that particular strategy. If you don't see it, don't trade. That is it. Now the next one is sticking to one currency pair. You don't need to trade a lot of currency pairs. You will see one person trading GBP USDT, the same person analyzing GBP card, same person trading gold, same person trading JPY USD. You know, sometimes it doesn't help. Trading different kind of currencies doesn't determine your success rate on the market. Okay, so you can stick to one strategy and one currency pair. One currency pair. You don't need to trade a lot of currency pairs before. You know, sometimes depending on the particular period you want to trade can also help you to know which currency pair are you supposed to choose. Okay, so as we have the various time zones for on the forex market, last time I've mentioned that we have the New York Times or the New York section, we have the London section, we have the Sydney section, we have the Frankfurt section. All these sections, okay, they are currency pairs that are highly traded during these sections. So for example, when you take the example, when you take maybe London section, usually euro pairs, for example, euro card, euro USDT, sorry, euro USD, euro this, euro JPY, usually those currency pairs are traded within the London section. Okay, so you can trade that, or you can trade GBP pairs. Okay, that is the pounds sterling. So you can trade the GBP pairs during the London sections. Okay, so usually when you stick to, probably maybe you are someone that trade only London sections, then you close, then it's good you trade either GBP or Euro pairs. Okay, so now it's 1 p.m. in Ghana time. That is, I think, 8 a.m. in New York time. So currently market has opened for a New York session. Okay, so for example, those that are interested in trading New York session in Ghana time or in Africa time, when it's 1 p.m. in Ghana, that is 8 a.m. in New York. Okay, and that's the time the New York traders start trading. Okay, yes, so stick to one. Make sure you have a mentor from the beginning. At least somebody must mentor you. You have a strategy, have patience, and be disciplined. That's it. You will make money. Being disciplined is very important. Okay, so the next question over here, okay, that's fine. So have a mentor from the beginning, have a strategy, be patient, and then be disciplined. Okay, all right. Okay, so thank you very much. Can you give us a recommendation on app to use as a beginner? Okay, that is a good question. So as a beginner trader, we have a Forex Hero. It's an app that that's available on App Store or Google Play Store. So you can download it, and it has all the basic courses needed, on it. So you can learn them, and then you do the exams. Then after that, you can start trading. And we have so for those that will want to do the use be doing sorry for those of you that will want to be doing the what do you call it, the analysis. Okay, you can use the we have I've forgotten this app. It's used for fundamental analysis, where usually you'll be able to know what is going on in other countries to determine how their currencies is going to perform on the forex market. Okay, so on the forex market, you need to be somebody that read a lot. In fact, you need to read about the economy of countries. Okay, economy of US, how their economy is performing. You see, when the economy is performing well, it affects the currency as well. So the currency also does well. Okay, but when you have a country where everything is basa, things are not going on well, there is low employment rate, the things are not going on properly, what happens is that it affects the currency of that particular country. Okay, yes, so as a trader, you can take advantage of that. This particular country is not doing well these days. Graduates in the house are not getting employed. Obviously, it's going to affect the currency as well. Okay, so you need to be somebody that reads about economy. In fact, you need to read the economy of those countries. Okay, and you will be fine. Okay, all right. So we have other app that I will want to recommend. Is Xness. Xness is a broker. So as I told you last time, Xness is a broker. Okay, so Xness is a bank that trade on behalf of traders. Okay, so if you want to trade with Xness, okay, kindly click on the link on my bio, and you register with Xness. Okay, all right. So we have the trading platform where all the traders in the world trade, and it's the MetaTrader 5 or the MetaTrader 4. Okay, so the MetaTrader 5 is an upgrade form of the MetaTrader 4. Okay, so it's literally the same trading platforms. It's free, it's just a trading platform. Okay, you can download it. So when you have a broker, then you link your brokerage account to the MetaTrader 5, and then you trade on MetaTrader 5. When you take your profits, when you make your withdrawals, it goes directly into your Xness account, and that's where you can withdraw the money into your bank account, or that's where you can deposit into your account. Okay, so Xness, I will recommend Xness. So if you are interested in trading with us, please kindly click on the link below. And so please, if you have any questions, you can ask. Okay, so I'm waiting for questions. So if you want financial freedom, as a young man, you want financial freedom, then I will recommend you do Forex. Okay, and you get to the level you want one day. Okay, it takes discipline, education for you to have success sometimes. So just be disciplined and have patience on the market. Make the right decision for yourself, and that's fine. You will be fine. Bet me, you will be fine. You will be fine. So I think we will end the live here. So in our next sections, we will talk more. So if you have any questions, please, you can write them down, or you can put them down on the comment sections, and then I will address them. So I'll see you tomorrow. Don't forget to subscribe to our YouTube channel, comment, share for others to also learn. Okay, see you later. Bye bye.